If Russia invades Ukraine, most experts agree, the best investment option is to buy Treasury yields, stated Brent Donnelly, president of Spectra Markets. Treasuries have historically served as a safe haven during times of geopolitical and economic stress. Treasury prices rising would result in a decline in yields, which move in the opposite direction of prices. Yields have risen as a result of a Treasury selloff, with the 10-year Treasury rate closing near 1.77% on Friday after reaching a nearly 2-year high earlier in the week. The Swiss franc, another popular haven currency, may also rally, Donnelly said, with the euro/Swiss franc currency pair likely to fall to 1 Swiss franc and 3 centimes on a frozen rope if Russia moves. Over the past week, the euro purchased 1.043 francs. Russia, which has already stationed over 100,000 troops on the Ukraine border, began moving tanks, infantry fighting vehicles, rocket launchers, and other military hardware westward from bases in the Far East this week, the Wall Street Journal reported, citing U.S. officials and social media reports. Russian President Vladimir Putin is seen as using the threat of an invasion as leverage in order to ensure that NATO never offers Ukraine or Georgia membership. Russia has made a number of additional demands, including the withdrawal of U.S. and allied troops from NATO's Eastern and Central European members. This week's talks between Russia, the United States, and NATO failed to yield a breakthrough. The U.S. and its allies have pledged to impose severe economic sanctions on Russia if it invades Ukraine. Friday's jitters intensified after a cyber attack rendered a number of Ukrainian government websites inaccessible. According to the Associated Press, Ukrainian Foreign Ministry spokesman Oleg Nikolenko said it was too early to determine who was behind the attack, but there is a long history of Russian cyber attacks against Ukraine in the past. Russia's invasion and annexation of Ukraine's Crimea Peninsula in 2014 sent shudders through global markets, but volatility quickly subsided, as is frequently the case during geopolitical flare-ups. In 2014, U.S. equities experienced some meaningful downdrafts on Ukraine, March and May, but quickly recovered. I believe that equities are not an appropriate way to play this scenario, Donnelly stated. When it comes to equities, the lesson from previous geopolitical crises may be to avoid panic selling, Market Watch columnist Mark Hulbert wrote in September. He cited Ned Davis research data examining the 28 worst political or economic crises in the 6 decades preceding the 2001 9/11 attacks. 6 months after the crisis began, the Dow Jones Industrial Average was higher in 19 cases. Following all 28 crises, the average 6-month gain was 2.3%. The Dow fell 17.5% at its low in the aftermath of 9/11, but recovered to trade above its September 10 level 6 weeks later. Donnelly noted that he has a tendency to downplay market reactions to political angst. Geopolitical issues are constantly simmering, and historically, very few geopolitical events have had a sustained impact on markets for more than a few days, he said, adding that there are exceptions, and when they do, it's huge. Stocks in the United States finished mixed Friday, with the Dow Jones Industrial Average down 0.9% for the week and the S&P 500 and Nasdaq Composite both down 0.3%. The early 2022 weakness in U.S. equities has been largely attributed to a spike in Treasury yields, which has been attributed to rising inflation pressures and expectations that the Federal Reserve will be much more aggressive than previously anticipated in raising rates and tightening policy. The VanEck Russia Exchange Traded Fund is down 6.6% in January and has lost more than a quarter of its value since late October's more than 9-year high. Over roughly the same time period, the Russian ruble has lost more than 9% against the US dollar. Barron's, Russian stocks may be too cheap to resist as Russia-Ukraine tensions rise. Meanwhile, analysts assert that investors have not fully factored in the impact of an invasion on commodities, most notably natural gas, wheat, and corn. Myra Safong of Market Watch contributed to this report. Europe is heavily reliant on Russian gas transiting through Ukraine, all the more so given that 2022 began with Europe's gas stocks at a record low. An invasion would almost certainly jeopardize approval of the recently completed Nord Stream 2 pipeline, which will bring additional natural gas directly to Germany, bypassing Ukraine. Oil futures have rallied to start 2022, with West Texas Intermediate crude, the U.S. benchmark, up more than 11% since the calendar flipped, and Brent crude, the global benchmark, up more than 10%. Both are trading within a few percentage points of multi-year highs set in November. Oil rallies after an analyst warned that the Ukraine crisis could be a seismic event for the energy market. With oil prices firmly in the political red zone for the White House and a Russian invasion of Ukraine remaining a top priority, the scramble for additional barrels is likely to become an increasingly urgent priority, RBC Capital Markets analysts wrote in a Thursday note. Thanks for watching. If you enjoy our content, please like, share, and subscribe.